There we go. Let's pray. King of glory, we come before you this night, morning, or evening. Um, we thank you for the gift of life. Thank you for everyone who's gathered here today. Thank you for all the sessions that they've been attending and all the sessions they will continue to attend. King of glory, may you help them to benefit from these sessions and to grow and to have evidence of their fruit, King of glory. May you continue to equip them and even expand their understanding to grasp what is taught and to even retain it and make use of it. Thank you for Coach Isaac, who you have used to bless us and enrich our lives. May you continue blessing him as well. In Jesus' name we pray, believing and trusting. Amen. Again, welcome everyone. Thank you for joining and thank you for your consistency as well. My name is Coach Lucy and I'll be your host for tonight. So I'll start with our mission and vision statement. Just a moment as I share my screen. Right, I hope you can all see my screen. Kingdom Financial Institute, who we are. Kingdom Financial Institute is a leading financial literacy school committed to empowering and educating first-generation wealth builders to build, preserve, and transfer wealth based on biblical principles. Our vision is to be the destination for first-generation wealth builders seeking to transform their financial futures. We aspire to create a global community of informed and empowered individuals who, through our guidance and resources, can build substantial wealth, protect their assets, and leave a lasting financial legacy for generations to come. We envision a world where financial security and generational prosperity are within reach for all who seek it, regardless of the background of previous financial experience. Our mission at Kingdom Financial Institute, our mission is to provide first generation wealth builders with the knowledge, tools, and strategies they need to achieve financial success and create a lasting legacy. We are dedicated to fostering financial literacy and promoting wealth building opportunities while ensuring that our students have the skills and confidence to navigate the complexities of wealth preservation. So, in a nutshell, that is who we are. And we like to keep reading this so that you get to know what exactly you're involved in. And for those who are joining us for the first time as well, you get to hear about our background. I do have just one announcement, and then I'll be welcoming Coach Isaac. Coach Isaac, I guess you'll expound more on this. We would like all of you to invite someone, and next week we'll be rewarding those who invite the most people. So kindly make sure you don't benefit alone. Just send this link, our Zoom link, to a friend or two or 10 or 15. There's no limit. So next week we will be rewarding people the person who invites the most guests. So I hope you accept the challenge and make sure that you invite people, as many as you can, and not just for the reward, so that as many people as possible can benefit. If you know you love someone somewhere, just make sure you send them the link so that you're not joining this alone or benefiting alone. All right, before I introduce the founder of Kingdom Financial Institute, I'd like to give you a brief of who he is as well, so that you know his background and just a little bit of who he is. And yeah, so let me just read. Coach Isaac Kubvoruno is a seasoned financial literacy consultant and a wealth building coach with over 23 years of entrepreneurial success. He is driven by the biblical mandate to create generational wealth as exemplified by Proverbs 13:22 that says that a righteous man leaves an inheritance for his children's children. Coach Isaac is also the visionary behind Kingdom Business Academy, which is an institution that offers Bible-based business coaching, leadership development, and entrepreneurial guidance. Coach Isaac's holistic approach and profound understanding of the intersection of faith and finance make him a sought-after speaker, coach, and mentor who is dedicated to helping others achieve financial success and leave a legacy. So, help me all to welcome Coach Isaac to take over. Welcome, Coach Isaac.
Thank you very much, Coach Lucy, for the introduction. And thank you for guiding us to this end. I want to thank you for the many, many, many days and hours you invest behind the scenes to ensure that Kingdom Financial Institute is what it is. I want to welcome you all who are here today. I can assure you we are going to have a good time. Today we are talking about a very practical subject on dividend stock investment or dividend earning stock investment or investing. I like this because it will show you in the most practical ways what dividend stocks are and what is the benefit of investing in them. Again, what dividend stocks are and what are the benefits of investing in them. Please get a notepad, get a paper, and write some notes. It is important to write notes so that you can always refer to them. But we are also we are recording this video so that you can go back and rewatch it where you can pause and rewind and listen again. This is a very practical subject. We are now in the day-to-day practical ways of how to invest. Right. Last week we talked about we introduced investing, and we talked about the account that will enable you to invest. Right. So if you were not there last week, I urge you to go back to last week's lesson so that you may understand what you need to do to begin investing. And we were talking about brokerage accounts, because you cannot invest without a brokerage account. A brokerage account is that vehicle that allows you, it connects you to the companies that have stocks and these dividends earning stocks so that you can invest in them. Without that, yeah, some banks will help you do that. But at Kingdom Financial Institute, we don't encourage you doing investment through a bank platform. We encourage you to open an account with a brokerage firm that specializes in investing. Investing is a specialized thing that you have to deal with people that specialize in it. So I hope you are ready today, and I'm going to share my screen. And I know that we are going to learn a lot of things. I'm going to give you practical lessons and tips, but also share with you some of those investments, some of those stocks that you can also do your own due diligence. I am going to try to stay calm and collected because I have a sore throat and I don't want to excite it. So if you see me today, I'm a bit tamed. That's intentional. It has nothing to do with you. So don't feel. I hope you won't feel offended. But I am happy. I am healthy, except for the sore throat. And I'm going to have my water here that I will sip once in a while. So let's delve into it, because we want to spend the next 45 minutes just talking about that. Right. So are you ready for this? Yeah, I hope you are. So I'm going to share my screen so that we can begin the practical lesson on investing. Right. So here we are. Welcome to Kingdom Financial Institute. And I urge you to keep coming. We are turning things around. And you're going to see that we are going to be even more serious because I believe that this is changing lives. Regardless of how many people are here, we will show up every single Friday. Because even if there's one person here, I can promise you that I will be here. And I know Coach Lucy is committed to doing the same. We will be here because if this can change one person, it has changed a genealogy. Because behind that one person, there are hundreds of people that are going to be affected by the knowledge of one person. So right now, even as we are starting, if you know somebody, just shoot a text message and say, hey, join me and listen to what is going on here. So I'm still finishing up this book on real estate investment opportunities. So keep looking at it. It's coming. All right. Today we are talking about the introduction to dividend earning stocks, right? Introduction to dividend earning stocks. We are laying the foundation. Now, there are non-dividend earning stocks, right? These are stocks that do not pay you dividends on a regular basis, right? Once you buy that stock, the only thing you benefit from is the stock itself increasing in value, right? The stock itself. If you purchase it or if you buy it at $10, right, and then it keeps increasing its value to $11, to $12, to $13, $14, $15, then you sell it at a higher price, and then you benefit from that. That is not what we are talking about today. Today we are talking about dividend earning stock. There's a difference. And I personally, I favor dividend earning stocks. And I'm going to share with you the reasons, right? A non-dividend earning stock, it's usually a growth stock. And as a result, it fluctuates. It goes up and down, up and down, up and down. And many people have lost money as a result. It's very speculative, right? It involves you studying the charts and seeing how it's going. And sometimes people make errors and you wake up and the stock is down and you lose money, right? Why? Because it goes up and down. It goes up and down. But when we are talking about dividend earning stocks, you are going to learn why it is important for you in your investment portfolio to focus more on dividend earning stocks. And I'm going to share those reasons, right? First of all, we have to define what is a dividend earning stock. So we're saying dividend earning stocks refer to shares of publicly traded companies that distribute a portion of their earnings or profit to shareholders in the form of dividends. So what are we saying? We are saying that a dividend earning stock These are stocks of publicly traded companies. Publicly traded, that's key. These companies are publicly traded, which means that they are not private companies. They are public companies, right? And you can buy their stock from the stock exchange. If a company is private, they are not listed on the stock exchange. So even if you want to invest, there's no way to invest unless you know the person who started the company and they are welcoming investors. But in a publicly traded or publicly traded company, you or anybody can invest in that company. And there are no restrictions. You can buy a fraction of a share, or you can buy thousands of shares or millions of shares. It's up to you, right? So now these dividends are typically paid out monthly or quarterly, which is after every 3 months, or semi-annually, which is after every 6 months, or annually, which is after a year. So you make the choice of whether you want to buy a stock that distributes its dividends on a monthly basis, or on a quarterly basis, or on a biannual basis, or on an annual basis. There are benefits, by the way, right? The more the frequency, the better the return on investment, because of the thing called compound interest. So if there are two stocks that have the same value, and one pays monthly, and another pays biannually, I would go for the one that pays monthly, because after they pay me this month, then I reinvest the dividends. Then when they calculate the interest for the next month, they are calculating that including the interest that I earned last month. The power of compound interest. So it is important, number one, to note that dividend earning stocks are publicly traded. You have to have an account with a brokerage firm so that you can be able to buy the shares. And once you have that, then you are able to purchase that. Secondly, I want you to also know that the dividends, they are paid monthly, or they are paid quarterly, which is every 3 months, or semi-annually, which is every 6 months, or annually, which is after every year, right? Now let's go, and then let's look at the characteristics of dividend earning stocks, right? Characteristics. Now, number one is that companies that pay dividends tend to be more mature and stable, and they have shown consistency in their cash flow and earnings, right? We are not talking about companies that just started today. Startup companies do not pay dividends on a monthly basis. Usually they are growth companies, right? So we are saying that one of the most important characteristics or characteristic of a dividend earning stock is that the company itself that sells those stocks is mature, right? What does that mean? It has been in existence for a long period of time. Number two, it is stable, right? It doesn't fluctuate. It doesn't rise quickly and lowers quickly. The stock itself is relatively flat with minor fluctuations. So what it means is that the stock itself doesn't go up sharply and go down sharply. They are stable. Stability is very important in dividend earning stocks. Number two, right? Dividend earning stocks often belong to established companies in industries like utilities, consumer goods, and healthcare. Very, very important, because these industries are not affected by economic conditions, right? As long as people are alive, they will need utilities like gas and electricity, right? Consumer goods, regardless of how the economy is, people still need to buy consumer goods. Healthcare, the same. Regardless of the economy, people need healthcare. So as a result, these big corporations are stable. They are established. They are not newcomers into the economy, right? Number three is that dividend payments provide investors with a source of passive income, making these stocks attractive to income-oriented investors or wealth-building investors. Anybody who is serious about building wealth, they always have in their portfolio dividend earning stocks, because they produce sources of passive residual income, which is key to building wealth, very key to building wealth. So now we're going to talk about the importance of dividend earning stocks, right? The importance of having dividend earning stocks in your portfolio if you are a wealth builder. Number one, they play a crucial role in long-term wealth building and portfolio diversification. What does that mean? It simply means that wealth building is a long-term activity, right? There are people who invest in stocks on a daily basis. We call them day traders. You have to have so much knowledge and tools to be able to do that. And I don't encourage anybody who doesn't have experience to be a day trader. I cannot emphasize that enough, because the chances of you losing your money are very high. There are many people who have lost money by trying to be day traders. So what is a day trader? A day trader logs in the morning. They purchase stock, right? Let's say they have $5,000 in their account. They examine stocks as they open up in the morning. Then they buy stock in the morning. And then they watch the stock as it rises. And then with the hope that when it rises or when it goes up, then they'll buy the stock at a higher price, and then they earn a profit, right? Some days you can actually do that. But here's the challenge, is that sometimes you buy a stock. Let's say you have $5,000 in the morning, you buy a stock for $5,000, probably at $10 a share. When you are hoping that it's going to go up, but suddenly it just goes down. And you wait and wait, thinking, no, it's going to come up, and then it keeps going down. And by the time the market closes, you have lost sometimes you can lose the entire $5,000, or how much ever you will have invested. It's speculative. I don't encourage anybody to do that. Many people have lost significant amounts of money as a result of that, because you cannot predict what the stock is going to do in a few hours or in a few days. You cannot predict that. That is why a lot of people lose money. The people who do that, usually they have insider information. And some of them they've been doing that for a long period of time, and they start with a little money. And over a year or 2 or 3, then they keep increasing their investment in that until they know what to do. But for a beginner, I will not, and I do not recommend that you become a day trader. And as a day trader, what you are doing is that you are basically, in the most cases, investing in growth stocks, right? Growth stocks. And those growth stocks, they fluctuate up and down, not only in days or in months, but even in the same day. They can go up in one hour and down in the other, and up in another hour and down. It's unpredictable what they're going to do, right? So you never want to put your money where there's speculation, too much speculation, right? But if you are a wealth builder, which is what we teach at Kingdom Financial Institute, we are saying that be a patient wealth builder. Wealth building takes a long time. That's why we use the word build. Just like building a house, it's brick after brick, line after line. It takes time. Many people lose their investment because they want to get rich quickly. The Bible talks against that. So what do I do personally, and what do I recommend? I recommend that you invest in dividend earning stocks from established, stable companies that have been in existence for a long time, right? And why is that important? Because long-term wealth building is what we are aiming at. And dividend earning stocks are good for that. Because while the stock itself may not go up very significantly, but every month or every quarter or every half a year or every year, you keep getting dividends. And after you get those dividends, what I recommend is that you reinvest. It's a long term. You reinvest so that when they calculate the next dividend, they are calculating even on the dividend that you have already earned. I'm trying to be deliberate and slow so that we understand, right? Another importance of dividend earning stock is that they offer investors the opportunity for both income generation and capital appreciation over time. What do I mean? Income generation, we've already talked about, that you are getting income on a monthly basis or on a quarterly basis. If you put in a significant amount of money, for example, let's say that you found some money somewhere, I don't know where you have saved some money over time, right? And you can actually invest in dividend earning stock and use the dividend to live on. What it means is that, let's say you have $100,000, right? Or $200,000 or $300,000, whatever amount, $50,000. You take that money, you diversify it in dividend earning stock. What happens is that every month you can be getting like $3,000 or $4,000 or $6,000, depending on the amount of your investment. That's why some people don't work. And you wonder, why are they just sitting at home? They are sitting at home earning dividends. on a monthly basis or on a quarterly basis. And those dividends are what they use for daily living. While, number two, while their capital has the potential to grow over time as the stock value increases. That is the beauty of investing in dividend earning stock. You don't just benefit from a regular income that comes monthly or quarterly or yearly, but you also benefit in that your capital that you invested, your $50,000 or your $100,000 or your $200,000 that you invested will keep increasing over time as the stock or the stocks increase in value, because they tend to increase in value over time. Right. If you have any questions, please write them down and then we can discuss them later. Number three, importance of a dividend earning stock is that dividends can act as a stabilizing force during market downturns, providing a reliable stream of income regardless of the short-term market fluctuations. Very key, very important key. What do I mean? If you choose good companies that are stable, that are not affected by market fluctuations, here's what happens. Even in a downturn, when the economy is down, even when the stock itself is down just because of what is happening within the market, right? The stock is down, but here's what happens. They will still pay you a dividend, even though the stock is down. Because some reasons why stocks are down has nothing to do or have nothing to do with the company performance. It is just across industry or across the economy, all stocks could just be down. But the company, the single company, although the stock is down, they are still earning. Why? Remember, we say these are stable companies that invest in utilities and grocery stores and in real estate. As a result of their stability, they are still earning money on a monthly basis. Although the stock value is down, the company is still making a profit, and they're still sharing with you, the investor. That's another beauty, right? And then let's now look at examples of dividend earning stocks, right? I'm going to give you some real life examples of companies that are established, companies that have been in existence for a long time, companies that produce income. Number one, Coca-Cola, Johnson & Johnson, Procter & Gamble, Verizon, AT&T, just to name but a few, right? These are examples of companies that you can buy their stock, and depending on the company, you will get dividends every quarter, every month, or every year, depending on the company, right? They have a long history of consistently paying dividends to their shareholders, right? And they have also strong brand recognition. These are companies that are our household companies. Coca-Cola, they are everywhere in the world. Johnson & Johnson, they are everywhere in the world. Procter & Gamble, they are everywhere in the world. So these are the companies that are too big to fail. They employ millions of people, right? They have as powerful, strong brand recognition. You see their picture, you know who they are. These businesses have the ability to maintain competitive advantage over other companies. They have a good track record of profitability. You can go on their websites. Every quarter, they are required to share their income statements. So you can actually go on their website and do a minor research. Every statement for every quarter is there. So you can actually see how they've been doing over the many years. And based on that, you can make an educated decision on whether to invest in that company or not. But those companies that I'm talking about, Coca-Cola, Johnson & Johnson, Procter & Gamble, and many others, we're going to share, I'll share with you some more. But for now, these are companies that you can actually Google today, or if you did open your brokerage account, you can actually begin to look for them in your brokerage account and buy shares. Like I said, put some little money in there and play around with the money so that you learn how to invest as you are starting to invest. But if you are a serious long-term wealth builder, these are companies that we are saying they are not too speculative. They have been in existence for a long time. And because of that, anybody who is serious about building financial stability, they have these companies in their portfolio. And over time, actually, most of these over time, probably in about a year or so, they range about 10%. Right, so you get 10% per annum as a result of investing in them, which is very good, very, very good. The best, remember, the best REITs, real estate investment trusts, they are also dividend earning, but they are in real estate. And we are going to have a class on that. We had one in December. There are some REITs that pay upwards of 16, 17, and 18%. And many people are really seriously building wealth as a result of that over a period of time because of the thing called compound interest, right? Now, within these dividend earning stocks, there are what we call dividend aristocrats. Dividend aristocrats. These are a select group of companies that have consistently increased their dividends for about 25 years or more, right? This is a select top group, impressive group of companies that have consistently, imagine underlining that, consistently increased their dividends for more than, I mean, for 25 years or more. What does it mean? These companies have recognized for their strong financial performance. They are also stable businesses. And they are committed to returning value to their shareholders by regularly increasing their dividends, right? And being a dividend aristocrat is a very, very, very important thing. It's a prestigious status because you just don't call yourself an aristocrat. No, you don't, because they want to look at your history. Have you been increasing consistently for over 25 years? And if you are not, then they don't put you in that category. Now, they have a long history of consistency, right? Minimum 24 years, 25 years and above. So these are not just fly-by-night companies. And they are recognized for their strong financial performance, stable in business, stable and committed to giving their customers value. Right. Let's talk about examples of those. Right. Number one is Coca-Cola. Coca-Cola is a global leader in the beverage industry. That's the leader. Everybody else who is in the beverage industry is trying to imitate Coca-Cola. The company has a long history of dividend increases, stable, right? It keeps increasing its dividends. So if you invest today in Coca-Cola, you know that over years, their dividend payout and their dividend percentage is going to keep increasing. So if they are paying 90 cents per dollar today, the next time is going to be more than that per share, probably $100. Next, 100 cents. Next time is going to be probably 120 cents. They keep increasing over time. Now, second example is Johnson & Johnson, right? It's a multinational healthcare company. It involves in pharmaceuticals and medical devices and consumer health products. And I mean, you talk about it, they are in there. It's a well-known brand. And J&J is their stock sticker symbol. So when you are looking for them in your brokerage account, you are looking them, please use the sticker symbol J&J, because there might be another Johnson & Johnson, which has nothing to do with this one. Well, there are companies with the similar names, right? Coca-Cola is KO. That's the sticker symbol. That's what you are looking for, right? And then the next one is Procter & Gamble, or Procter & Gamble Company, right? This is a leading consumer goods company. They have a wide range of household and personal care brand, including Tide, Pampers, Gillette. That's the company behind all those. They manufacture cleaning products. Most of the cleaning products that we use in the kitchen are manufactured by Procter & Gamble. And their sticker symbol is PG, right? Then we have 3M. 3M is a very diversified technology company. It's deep in manufacturing. It does a lot of research, right? And I once was their the consultant. They are so much, diversified. They're not just in one. They don't just manufacture one thing. They manufacture a lot of things. And as a result, this is a good company to invest in because within itself, it's diversified, right? That's why they can pay dividends over a long period of time. And its sticker symbol is M. So when you are looking for it within your brokerage account, you are looking for 3M because there could be another company called 3M something. So just because it's 3M doesn't mean that, or one company can also have many other companies under it. So make sure that you use the right symbol. Next one is ExxonMobil. ExxonMobil is a company that is an oil and gas global company. They are everywhere. Go to Africa, ExxonMobil is there. Go to Asia, they are there. In America, they are there. Europe, they are there. They are global, and they are in oil. That's why, and they are also in refining of the oil, not just in extracting it. They refine it, they market it. They are a very big company, and they pay dividends every single time. You do your own research on how often they pay. More examples of dividend earning stocks. McDonald's, right? Don't play with McDonald's. They are everywhere in the company, in the world. It's a globally recognized fast food restaurant chain. They are iconic because of their menu, that wherever you are, the taste is the same, right? So they are very strong and they pay dividends. Next is Walmart, sticker symbol WMT, Walmart. Walmart is the largest world retailer. Imagine that. The world's largest retailer. There's none like it. Right. They are also in multiple locations across the globe. They're in Africa. In South Africa, they are there. They are not called Walmart in South Africa, but they are there. Here in the United States, in Canada, in Europe, they're everywhere. And as a result, they pay dividends. They are part of that dividend aristocrats. They are known for that. So that's one company to have in your portfolio, right? AT&T, the sticker symbol is just T. It is a communication giant providing wireless and wireline internet and entertainment services across the United States and many other countries, right? And then next is Target. Target, they pay dividends, and they are part of the elite group of dividend aristocrats. They will pay you dividends on a monthly basis. Lastly, for today, I mean, there are many, many, many. I could go on and on and on, but those are my favorites. For my own personal reasons. You can do your own due diligence, but there's Consolidated Edison, right? This is a very, very important company because it's in utility. It provides electricity and gas around New York, right? They have been consistent in paying dividends, and they are part of that elite group called dividend aristocrats. All right, now let's look at that. Dividend aristocrat, there are some risk factors. Every investment has some risk factors, but dividend aristocrats, they have the lowest risk factors, but they are there. And what are they? Number one, dividend cuts and suspensions, or dividend suspensions. What it means is that once you buy the company, once you buy the stock, you must also ensure that you keep checking on a weekly, bi-weekly, monthly basis to see if they are cutting there. Usually they don't just do it on a monthly basis, unless they are paying also on a monthly. If they are doing that on a quarter, just be in the habit of checking, right, that they don't cut dividends or they don't suspend dividends for time. Because sometimes during periods of financial distress, some companies, although they are aristocrats, they may cut. That's why it is important to understand the history of the company. Number two, interest rate risks, because interest rates may rise or fall or fluctuate based on the economy. So you need to watch that. Also, market risk. Dividend earning stocks are still subject to market volatility and may experience also fluctuations. Although the fluctuations are not very dynamic, they also may have them, right? Now, I don't want to go into historic significance today. We're going to leave it for another time because of our time. But I hope you have learned something new. If you're a starter in investing, I recommend please watch this video again. But more importantly, open a brokerage account, begin to learn how or practice how to invest. If you are not sure and you need a guiding hand, we can do a one-on-one. So you can sign up for one-on-one sessions where we can guide you and give you the knowledge and the tools that you need to be able to make informed decisions in your investment. So may God bless you. May He keep His countenance shining on you. If you have any questions, please raise your hand, and Coach Lucy will call you up. You can ask your questions, and I'll be happy to answer them. Thank you.
Thank you, Coach Isaac, for diving deeper into this topic that you started last week. So we encourage anyone who wasn't here last week to kindly watch last week's video so that you can follow up on where he started last week. You can check out Kingdom Financial Institute on YouTube, and you'll see all the videos that we post there. I do see one question in the chat. Two questions actually. The first question is, how much is the minimum capital one needs to start investing? Coach Isaac, I'm not sure if you heard the question. I'll just read it again. How much is the minimum capital one needs to start investing?
Thank you for that question. Sorry, I had been kicked out of the meeting. In terms of capital investment, it doesn't matter. You can begin even with $50, even $20. You can always keep increasing. But the key thing to understand is that the more you invest, the greater the amount, the greater the dividend that you get. So the dividend yield is determined by the amount that you are invested. So for example, let's say you buy stocks of a company that are probably, let's just for argument's sake, they are $10 each. Now, if you buy 1,000 of them, and the company is paying $1, let's say every quarter, you realize that the more shares you have, the more dollars you have. So but like I said, investing is very important to start, because the most important thing about investment is time. Over a period of time, because of compound interest, if you keep, for example, what I recommend is that when you are investing, let your money come from your paycheck into your brokerage account straight on a monthly basis or on a weekly basis, depending on how much or how often you get paid. That's so that at every paycheck, you are increasing your investments. And over time, it just keeps getting more and more, and you're getting more and more in dividend yield. So it does not matter where you start. It only matters how much you have and how much you are willing to put in your brokerage account to invest. You can start with $50, and you can deposit or invest $50 every paycheck. So if you are paid weekly, by the end of the month you have invested $200. By the end of the year, you have invested $2,400. By the end of 10 years, you have invested $24,000. But you may find that because of compound interest, your money will double and triple and quadruple because of compound interest. Thank you. Great question.
Thank you for answering that question, and for Ja, who asked it. We do have another question. What happens to an investment we make if a company is bought by another company? It seems like something that even happens to big or stable companies.
Right. That is very important. That's a very, very important question to ask. Usually, when a company buys another profitable, stable company, usually it's called a merger. Usually they merge, right? And it's strategic. Merging is strategic. And I will just focus on the benefit to the investor, right? Usually when companies merge, their stock value increases. The company that buys and the company that is purchased, even when you just hear the news, that news that Coca-Cola is going to buy Pepsi, right? They are in discussions. Both of those stocks usually increase just because of the news, because it's usually strategic in that the company becomes bigger, right? And their earnings also become larger. And it's usually they buy a competitor, right? So when a company buys a competitor, which means that now they don't have any competition, they can increase their prices the way they want, and which actually gives more profit to the bottom line, which means that the stock values are going up and the dividends will also go up. But it is important to just be reading the news as the merger is being discussed, and you can also watch how the stocks are going, whether they're going up or down. Some companies are purchased because there is a problem. So we also need to understand that. But if the company itself is a dividend aristocrat, then usually it's not because of any problem. It's just that they want to merge to be a stronger company, or they want to merge, for the sake of being the only company that is providing that service, so that they don't have any competitor, so they can make more money. And usually it's a benefit to the person who is investing in those companies. Great question. Thank you.
Thank you, Coach Isaac. Do we have any other questions? Kindly, if you have a question, you can raise your hand and I can unmute you, or you can type it in the chat. We have 2 or 3 minutes for another question. All right, it seems like we don't have any other questions. I would like to thank all of you again for joining. Thank you for taking your time to join us tonight, and or noon or whatever time it is from where you're joining us from. I can assure you that with consistency, you will not fail to benefit from this. Thank you, Ruby, for joining us again. Thank you, Ja. I think, Ja, this is probably your first time joining us. I would encourage you to kindly subscribe to our messages so that you get information on what's going on when we post, and uh, you can keep in touch with us. I just shared a link in the chat, and you can also check us out on kingdomfinancialinstitute.com for more information, and if you want to see what packages we offer as well, feel free to check us out on kingdomfinancialinstitute.com. I had said an announcement just before we started, and majority of you are not there. I'll say it again. We encourage you to invite people for our sessions next week, and even as we go forward. And specifically next week, we will be rewarding the person who invites the most people. Now, here it's not just about the reward, it's about you wanting to also invest in somebody else's life. If you have taken the time to come and benefit from this, there has to be somebody else who is in your circle who you care about and would be worth inviting to benefit as well. So next week, kindly make sure you don't join these sessions alone. And even moving forward, make sure you pull 2, 3, 5, 10. There's no limit. Make sure you pull people with you so that you benefit together and you rise together, and that will be very beneficial for all of us. So if we don't have any other question, let's wind up with a word of prayer. King of glory, we come before you this evening. Thank you for this session. Thank you for everyone who took that time to join us tonight. May you keep blessing them, King of glory. May you keep expanding their capacities, King of glory, that they may keep understanding, they may keep growing in this, King of glory, that by the end of this year there will be a notable difference. There will be significant difference in their lives, King of glory, and in their financial lives as well, King of glory, that they will never be the same again, that you will use them to change the generations that come after them, King of glory, and even the families where they come from, that they will not remain the same again, King of glory, and also help them to remember to pull others along so that they don't go up alone, King of glory, that they all be beneficiaries of this session, King of glory. Thank you for blessing us with Coach Isaac. May you continue blessing him as he blesses us, King of Glory. And even he mentioned that he was not feeling so well, King of Glory. We commit him unto your able hands, that you heal him and continue giving him the strength and the health that he needs to keep going, King of Glory. As we disperse to do what we need to do, may you be with us, King of Glory, and meet us all at our points of need. In Jesus' name we pray, believing and trusting. Amen. Thank you all for joining. You can check us out on YouTube as well. And you can recap the sessions, that in case you've missed or you'd like to also replay this, check us out at Kingdom Financial Institute on YouTube. All right. Thank you, everyone. See you next week, same place, same time.
Thank you.
Thank you very much, everybody. Have a good night.
You too, Pastor.
Thank you.